Imagine that.
Yo, man, YouTube.
YouTube was seriously hating for a second, but it's like,
I hope I'm not the bad luck charm.
no, you're not.
Nah.
No, you're not. But who
It's too much heat.
It's too much voice?
For YouTube.
Is that the voice of like, I told you guys I am seeing ghosts, like, because I'm hearing voices. So, what's good, y'all? You guys thought that we would like not be here? Of course we'd be here. We're here for each and every
ready.
Now, though that YouTube or Zoom, whoever it was, wasn't for us, we're here for each and every single one of y'all. What's good, everybody? I'm Mark Monroe, and this is the, who are you, Miss Lady, with the...
You know, no, I'm just kidding.
You got a lot going on.
I have a lot going on.
We're going to get to that. We're going to get to that. But y'all, thank you for joining us. You know what we got to do. Go ahead and drop in where you're coming from. And on top of that, if you had a great day in the market, please let us know. If you didn't, it's okay. We're all family here. You can let us know as well. If you are a subscriber to our channel, then we thank you. You rock. If you're not, we would love to see you be a part of the family. So go ahead and hit the subscribe button. And on top of that, please go ahead and smash that like button if you're feeling nice. And if you do hit the dislike button, please tell us why. If not, you're still going to be here possibly, and you'll probably gain some awesome value. So we thank you for being here with us. And then on top of that, if you want to know when we're going to be dropping our next videos, which we got a lot of heat coming, go ahead and hit that bell. So thank you. We got folks in from Staten Island, Newark, New Jersey, Baton Rouge, Louisiana, tons of New Orleans. We got Mississippi, ATL. We got bats and pandas. Do you know anything about that?
You know, I heard some
caps.
I heard some things.
We got scales.
Okay.
You know, but before we get into all that, Jolin, how are you doing?
you know, I'm actually doing great. I'm doing great.
Okay. Okay. Oh, okay. So can you tell us about like this ensemble thing?
I need more ways to celebrate, you know, because it was getting to the point where, you know, I can't bust the money gun like all the time. It like loses its, so now.
It never loses its effect.
But, you know, I'm going to switch it up. You know, I got to keep the celebration impromptu. So,
okay,
I want to shout out two companies tonight, two companies, because y'all know I am all about recycling the dollars that we make in the market and bringing it back to the community for real. Support Black businesses. My success, your success is tied into the success of other Black businesses. And once we 100%. Do that, there's no stopping us. So with that said, I want to shout out the Sunny Side, okay? And it's, if you go to Instagram, you can find them at the Sunny Side Up. It's a Black-owned shades company from the guys from Dormtainment. Shout out to Cam and Rome. Thank you so much for making these. These ones are called Strawberry Mimosa, and the tint, y'all, is crazy. Man, it totally sets a whole vibe. And then I also want to shout out Magic Tea's Sorrel Hibiscus Tea. Y'all know I like sorrel now, okay? And so I had to like have that for tonight. I still have water too, so I'm gonna, you know, be going back and forth, but like how fitting is this?
You diversified over here tonight, so do your thing.
Seriously, so.
Yo, these glasses had her on a whole vibe because she even lit a candle. Like this is not a game. All right, so today was interesting, and we're going to get into all of that because today is like, it's an awesome episode for each and every single one of you. We love you. Now, we definitely see people putting money in the super chats. So do we know where the super chat money is going to this week for the nonprofit?
We do, but there is something that I have to double check before I can say that what the company is or what the nonprofit is.
Okay. So for those, is to be continued. We definitely do our due diligence before we put it out there. And if it doesn't, you know, pass the test, then we'll find another nonprofit and let you guys know where it goes to. So I'm excited.
I'm excited too.
You know, over the past few episodes, I've said that I've been seeing things like, you know, it's been rocking my sleep. It's just been in my ear. I feel like something has just like been not in my shadow, but like walking side by side next to me.
I've been praying for you, Mark.
You've been praying for me?
I've been praying for you.
Yo, I lit some sage, and I thought that it was like a bad type of ghost, but it's not a bad ghost. So we can just, you know, expel all that type of drama out of the air. I think that this is I would say, the dope type of ghost, like the type of ghost that you would want to have as a friend. So, I mean, I got to know a little bit of this ghost. And so let me just say, this person is one of the most genuine people that I've ever met. Super duper dope as it pertains to what they do. They know their stuff. It's kind of like, for me, sometimes it feels like looking into the mirror as, you know, as a trader / investor. There's not many people out there that I can truly say that, you know, really, you know, honestly, it's like, oh, wow, I'm sitting back and I'm even learning stuff from this person. So if you guys think you know who I'm talking about, you know, go ahead and, you know, throw it up in the chat. You know, we definitely want to hear y'all. I'm definitely seeing it. So I guess it's time for a reveal. Don't you think?
Yes.
All right.
And don't forget, I just want to talk about what's going on in the market.
I think it's time that you reveal yourself to the people.
I'm happy to be here. Thank you. Happy Tuesday, everybody. How you guys doing? My guy, I appreciate you. I appreciate you guys so much. Seriously.
Thank you. Thank you.
And thank you for the intro. I greatly appreciate that. It means the world to me. Being a trader, it means a lot when business people and traders can be like, hey, I've been watching you. The first time I heard you sounded crazy. Maybe the third or fourth time it's like, okay, you do know your stuff. So that means the world to me. And I love those glasses you got on too. So
thank you. I'm loving them too.
You.
See, I can't rock them. I just, you know,
because you're not blind like us.
Aviators. That's like my thing.
That'd be dope.
Okay. All right. So without further ado, let's go ahead and break it down real quick. Let's just get some of the essential housekeeping out of the way. Jolin, how are those markets today?
Well, you know, the Dow, well, there's a lot of things going on with the Dow. They don't
a whole lot
with 3 other ones. So we have, let's see, Exxon, Pfizer, and Raytheon were out. And Salesforce, Amgen, and Honeywell have now taken over those spaces, and they're actually up too once they were in. Although they have that kind of like shakeup, the Dow was down by negative 60.02 points.
Sounds a little controversial.
Well, and then S&P 500 was up by 12.35 points. And then we got the NASDAQ, y'all, strong, up 86.75 points. Then for sector performance, I was actually shocked when I saw this today, but it was communication services, number 1, healthcare, or just health rather, in the second spot, and then followed up by consumer discretionary. And we saw that XLY had a 52-week high again. Mm-hmm. Then for our bottom feeders, we got materials, utilities, and energy. Then for our pick performance, which we announced last week, I believe it was, that we have new people. So just like the Dow kicking out people or kicking out companies, we be kicking out companies too and adding new ones. So for the number 1 spot, we got AMD. Y'all seen AMD. They are doing well in the aftermarket as well. ARQ is up and a 52-week high. And then we got Square as the top 3rd spot. And then for our bottom feeders, we got Datadog, Boeing, and Best Buy. And we will talk more about Best Buy, y'all, because Best Buy announced earnings. So we'll talk about that. But for our 52-week highs, like I said, XLY, RTH, XLC, ARQ, Adobe, and y'all know SMH. I already posted it. Y'all know SMH was in that 52-week high. So, you know, let's just...
Can we just talk about that for a second? Like, what is going on? Like, because clearly...
Yo, there's been some confusion because
Ian sipping water over here. Like, what is going on? Like,
people have been talking crazy. First of all, SMH and I, we never broke up. Let's get that straight. There was never a breakup. SMH was in my side account, aka the Tesla account. I moved SMH out of that account and moved it over into my main account, aka the Empire account. And then once SMH moved out into the main house, y'all, then I moved in NVIDIA to the Tesla account as the new side stock bay. Okay.
Gotcha.
So that's what happened. I did not sell out of SMH. I mean, I did sell, but then I got in a different position.
So you're saying that SMH got moved from the guest house to the main house?
I'm saying.
Well, there it is. There it is. All right. So today we're going to talk about some stuff, and we want the world to get to know you, Ian, because you know you're a solid brother, and we want to talk about we definitely want to talk about trading, but we want to get to know you. So one, who is Ian? And then two, tell us what you do, brother. Let's talk about Lunchbox.
Who am I? I'm Xander's dad. I'm the father to the greatest child in the world. And my mission is just to try and help show people what I wish I knew going back to 2000, 2001, because I didn't know about investing. So that's why when I look back in 2000, I'm like, I could have worked 2 jobs and put 1,000 away and had 25 million, 30 million. But of course, in our community, it wasn't talked about. What I do for a living, I invest. So for those of you who just meet me, I wasn't always suit and tie and, beard balm and all that. It was normally t-shirts and hoop shorts. I consider myself an intellectual athlete. So investing just happens to be my sport. And if you listen to me for a little bit, I think you may have a couple ideas that you may like. So thank you guys for watching.
All right, so we know of you as the master investor. So can you tell us how you came forth with that name, brother?
It took a while. Let's be very honest. Ian is a very boring name. I appreciate my mom because in the 80s she was like, "Let me give my baby a name so he can get a job." So because if I name him DeQuavius, he may not get that resume slid through. But from a branding perspective, before I got into investing, I did marketing. So I needed something that would make me stand out from the market, and whether you liked me or not, I wanted it to be a powerful title. So of course, Buffett has Oracle of Omaha. So I was like, can't take Oracle because they're going to say that I'm biting off of them. And it took me probably 8 months to come up with the name. And once I said it to a friend of mine, he was like, if you do not go run with that on IG right now, I'm going to go kill you and go take it. So I put it up, and then I saw immediately half of it was like, I hate him. Who does he think he is? The other half was like, great branding move. So the title of master investor is something that it's a reminder for me to earn every day. It's not me proclaiming that I'm not Jim Simmons or Tepper or in that ilk yet, but working on it each day to get there. So
sweet. All right. So we hear you talk about futures.
Mm-hmm.
So go ahead and break that down for the people, because a lot of folks, they talk they know about stock.
Mm-hmm.
People are starting to get to know about options.
Yes.
But tell the world about futures.
Futures is the highest paying asset. Let's start with the disadvantages. The disadvantage of futures is that you cannot hold it for longer than a 30-day period. If I can do a 2-year swing trade on futures, I would never even be online. I'm just being real with you. No one, I would get a Smoothie King shirt and act like I worked at Smoothie King for a living and go away. But on an intraday basis, think about this. If you trade 100 contracts, so we're going to talk some bigger numbers and we'll size it down.
Let's do it.
If we do 100 contracts, and let's say we get 8 ticks, which is for those of you that trade stocks, if it moves 8 pennies in your favor, that's 10 grand. Now, I don't know what you guys trade, but many people aren't able to hit 10 grand intraday in less than a 30-minute cycle predictably and know what their Ulster index is, Sortino index, what your profit factor is going to be, average time in market. So some of the biggest investors like Paul Tudor Jones invested in the futures market. So it just pays more than everything. And we were talking earlier, the holy trinity is long-term investing first, then swing trading options, and then intraday futures. So once again, long-term investing first, swing trading futures, 2 years ideally if you can afford it, and then intraday futures, that's my personal holy trinity. And then
there it is.
You guys are set.
So how did you get into it though? Like, so how did you get into futures trading?
Oh man, this is great. I had so I had a marketing agency. I had a buddy Art that worked at a bank in the recession. Recession came. He was like, "Hey, you need to invest every dollar that you have into the market." And I was like, "I'm not gonna listen to you." Great. 3 months later, he calls me. He's like, "Hey, I got in the city at 99 cents and $1.01. How much money you put into the market?" I was like, the what? He was like, "Remember when I called you and told you to buy everything?" I was like, "Yeah." He was like, "I'm up 700%. How much you up?" I was like, see, what had happened was I had told Craig and them I was going to do it, but I didn't do it. And then, so it was a realization point for me where I was like, when someone, and he's a brother, so not many people walk to you with no agenda and tell you, place money here because I'm doing it. And then I'll help you elevate and don't need anything from it. It's rare to do. So, but from that moment on in a recession, I was like, I'll never be stuck again knowing what to do. Because I used to watch CNBC all day, even when I had my marketing agency. So I've been watching Carl Quintanilla and Mark Haynes.
Judge.
So yeah, like forever. But to be able to take in all the information and not know what quantitative easing was, or PE ratios, or risk to reward ratio, or portfolio management theory, any of that, I was like, my Lord, I have to learn this. So I went super hard. Now, fast forward a few years, had a client that owed me $80,000. I was like, yes. Made that phone call, like, here's the wire instructions. And she said, you did a great job. I appreciate you so much. But if you want the 80,000, we're going to go to court. I'm not going to pay you. So for those of you, because everyone always says, why don't you just go to court? For those of you that have actually been to court, by the time you get to court, you pay a lot in lawyer fees, and then a person usually does not even have the money.
Right.
So I said, what I'll do is I'll make sure. I had a conversation with my dad because my cousins and them were acting a little bit crazy. So he was like, you have to go contain them. You can't risk your life for that little bit of money. And I'm like, man, I got a kid on it. What do you mean a little bit? That's a lot to me. And he was like, yeah, but I had many days like that when I got done wrong in deals. So when you didn't want to take out the garbage and didn't want to do your homework, this is what I was going through as well. Go all in on the investing thing. And from that moment forward, I was like, okay, I'll never let anyone put me in a position where I can't take care of my family, and went on demand. So the great part that I love about investing, whether you like me or my approach or how I do things, does not matter. If I shoot the ball and it goes in the basket on the ES future, Dow, NASDAQ, Nikkei, German DAX, I'll get paid. And that's one of the greatest feelings in the world to know, especially as a Black man, that you can provide for your family on demand and don't need anyone to do anything or buy anything from you. And then, but that company 2 years later went out of business, and I was incredibly happy when it did. So, so Rock Jones, yeah, that was a lot of karma for her. Bless you, because she's watching tonight too.
Okay. So I have a question. What's the feeling like, especially because, you know, in the sense that, you know, we're all in the same category. We're pretty much giving our knowledge, our brain and energy to the culture, in the sense that our goal is to help uplift them and teach them the things in which that we know, and also the things in which from our learning experiences. You know, what's that feeling like for you?
It's amazing. It's tough some days, because sometimes you may feel as if people aren't listening fast enough. But on the other end, if we even go back to 1990, what prominent Black people in any space were openly talking about investing and were able to? So to do this show in 93, we would have had to add a deal with BET to do this. And a production cost probably would have been like $500,000 to 1.5 a year. To make a book would have cost $60,000. So to be able to hop on and just be like, hey, get SMH, NVIDIA, VO, VTI, and enjoy, the cost is amazing because we can give a lot out for free. But it's great to be able to, even like the people back home, because I'm from the Midwest, for people back home that are like, hey, man, I don't want to pay for your stock club, but I ear hustle and listen to Market Mondays, and I picked up 6, and now I'm up 40%, and it's my first time investing. I'm like, thank you. That's what it's there for. we are there to literally uplift. And the great thing about the market is it's like, we don't have to compete. We can all be in SMH at the time. And I know that's your bae, but if we take it on a little date, you know, once in a while, you know, ain't nothing wrong with that. You got to get some sleep. Let me entertain SMH while, you know, NVIDIA. I'll be like for a while. If y'all go on vacation for a couple of weeks, cool. That's fine. I won't be mad. We won't argue, but we all can win together and be in the same thing collectively. And I think as a community, we should pile into some of these companies collectively so we can at least go to some of the shareholders meetings and start to voice concerns calmly. So just
Ian, I want to know about, I always like to ask people what, like, have they learned? So as far as the lesson, so what was the last lesson that you learned that, I want to know about the lesson that like had you either questioning things or making new plans or, you know, asking why God, why. I want to know those lessons.
Like the first time I went through it?
Yeah.
I was the first time I lost 26,000. So I was over trading. So this for my traders, type yes if you agree. Anytime you overtrade, it's always like, oh my God, what did I do? Dear Heavenly Father, I swear, give me one more chance and don't let me blow my account.
I'll never do it again.
I'll never do it again, God. I swear to you. Right? It's always that. So not having it, when I call a system, I mean, we want to act as if we are robots, and it's hard to do because we're not wired to do that.
Yeah.
But I tell everyone in my universe, I'm like, your best position is to take 1 or 2 trades per day. Now, from a trading, and we'll talk about trading plans later, but from a trading plan perspective, you should know to a T per year how many trades you're going to take. That includes long-term positions, swing trading, and intraday. So when 2021 starts, you should already know, okay, I got 28 intraday trades, I got 14 swing trades, and maybe 12 long positions that I'm going to engage in, and then you're done. That's maximum, right? But so I was over trading. I was on a nice little hot streak because I used to take like 9 trades on a day. So I was like 7 for 7, and then it went past prime time in the futures market. So when the futures market volume drives, it drives up hard.
Yeah.
So then I took a trade, and I think I was in maybe 12 or 15 contracts, something like that. And then I go to this is how confident I was. I left before I had locked in any profit, went in, brushed my teeth, brushed my hair, put on my do-rag. I'm like, can't wait to post this. So I have my surround sound connected to my computer, and all I hear is, for those of you on Ninja, you know the sound, stop filled. I'm like, there's no way in hell. Because I had like, at that time, I think maybe a 50-tick stop loss. So I'm looking and I'm like, nah, the system tripping. I go and look and it's Suge Knight red on my screen. I'm like, it skipped my stop, went down further. So for those of you who are Ninja, it gave me like 8 ticks worth of slippage. And then I had to trade from the boys in the hood cry. Like I just started crying and didn't even know. I was like, no, ain't no way in hell. No, wait, what? And then I was like, okay. I went in the mirror. I'm like, I'll never do this again. I'm going to stick to my plan. I shouldn't have overtraded, because this is the great part about the futures market. It will teach you if you are disciplined or not. There's no theory in that. Do you follow your plan to the T? Do you take your setup when you should, or do you not? And it was an expensive lesson, but it set the ground for me to not trade out of pocket. And even as a discretionary trader, like I have to have a rule set. So it's almost like a program in my mind. These are the times I trade. This is exactly what I trade. The number of contracts. This is when I won't. If I'm tired, I got into an argument, a fight with my significant other, don't trade those days, right? So it's a hard rule set that I follow to the T. And then even with that, it's like, okay, great. Take 1 or 2 trades. And I still have moments when I want to take more, but I'm like, for what? Just be quiet. The silence piece is key. So even when I would have people, because when I started in futures, there was nobody black in the space, especially like on the retail side. Like I met a couple of black floor traders and a couple that worked at prop funds, but it was very few. So it was a lot of talk back and forth of like, can you do this or can you do that? And I would get into contests. Like, okay, cool, pull up. I'll trade against you. And that ego trading is what caused that. It's like, okay, great, I'm gonna post this, and then I had the loss, and I'm like, it's not worth it. So just trade like Yeah, God has you covered, said trade responsibly. But that was my big coming to Jesus moment that made me be like, okay, let me get my discipline completely in order.
How long did it take for you to develop your rules or your standards?
In total, maybe like a year, but I'm talking like a year. So my laptop is called Baby One because I literally slept in the bed when I was learning. When I was first learning, it was everywhere with me, like in the shower, party, bed, like literally. So that's the biggest thing that I learned is like just to be completely dedicated. So a year, it may to an average person may feel like 4 years because it was 12 to 16 hours a day every, and I'm talking Monday through Sunday. Monday, like no clubs, no multiple women, no hanging out, no bar, no, all in. So
what is it like now as far as time?
I still study 6 to 8 hours a day because I love what I do. I love what I do. Like I never don't have Thinkorswim in job. I'm always looking. I'm looking for a slight performance edge. So if I see something in the market where I think I can get a little, so even when I got like my tower built and then start tethering into Ethernet, that's like, having like a AMD Threadripper,
yeah.
Little performance edges may make
all data packets matter.
a ton. So for those of you that are trading, a small key that will help is tether into an actual Ethernet cord. Never trade off Wi-Fi alone. Yeah. Huge difference. Like it'll probably, for those of you that trade futures, you're probably net 12 to 14 ticks a month if you trade every day, just in being able to see things differently that way. So, but it's, I'm looking at it all. It's like, it's my passion. So it's not, I don't judge it as work anymore. But I'm still doing it all day, every day.
We were just talking about that, Mark.
Yep.
Interesting.
About how it doesn't feel like work.
It should feel like not as good, but almost as good as sex. Like it should be that. Like I never got up and was like, "Damn, I gotta go look at the S&P today."
Nah, that's not me.
No, and this was even when I wasn't always consistently profitable too. So because I know people are like, well, you're able to do that because you're making. It was always that way. Like you had. So even when like I had the marketing agency for it, when I first got hard into the futures market, I stopped any client work for a month straight and just went all in. And then when I saw it, I was like, okay, great. Cause I started off swing trading first. So that's why, like, from your perspective, holding an option a year out, it's the same thing. It's like, to me, those are just elongated swing trades or pre-position trades, right, in a portfolio. And then after that, I was like, okay, let me just go all in and learn this. And I talked about it yesterday on Market Mondays, like being silent and not having a lot of traders to talk to was an advantage because it was just on me. So like I literally on Thinkorswim would go through every single future there is. So gold, palladium, cocoa when it was available, /CC on Thinkorswim, like every single one. Paid, went to Chicago, paid for the other Dow future DDD, got data to that. And then I had to manually get charts printed out. And I was a black kid that was not in the industry, so I got taxed. But I got charts from 2004 back to 96. Just bar charts, and I can go through and flip through, and now you see the same patterns and a cyclical cycle over and over. So it's like it should be an obsession, like kind of like that Mamba thing that they talk about with Kobe. Like that's what it should feel like for you. That's what absolutely it should feel like.
Dope.
Thank you for that, Ian.
So thank you,
man. So, Ian, is it time that we like, because it's Trade Talk Tuesday, and you know how we
get right to the charts.
Yo,
we get right to the charts.
For those that don't know, like, if you're new to the Come Up series, and by the way, we just broke our record, which is we now have 1,800 people watching us. I think our record was 1,400 people. That's amazing. I think that's like quite a bit of Red Panda family that's out there for you, Ian.
I love my Red Panda family.
And on top of that, shout out to everybody that's been donating towards the super chat. Shout out to EYL. We definitely see the brothers of the Suicide Squad that are in there. Brothers of Alpha Phi Alpha. Yeah, you guys are all just super duper dope. All right, so Jolin, we'll let you control the destiny of what charts shall we look at. And keep in mind, Ian, you also have screen access. So everybody's got screen access. This is going to be
for
pretty
those on
interesting for
YouTube,
everybody.
yeah, I want to just answer as many questions as you can.
Yep.
So if you're a trader trying to get consistency, even with that, like just map out the number of trades you'll take per week. You'll have a higher win rate, higher profit factor. And I'm begging you not to overtrade. I know, because it's not, even if you're small, because if you can get to a place when you're predictably having profit and treat it like a business, there's a bunch of places that you can get money from.
There it is.
A bunch of places that you can get money from. So, but yeah, we can dive into the charts as much as you want to.
All right.
We can geek out. Like we can all geek out. So where should we start, Jolin?
We're gonna start with Best Buy.
Oh, okay. You know what? Since Ian is the guest, we'll let him take Best Buy.
All right.
And I'll bring it home as it pertains to the fundamental analysis on the back end side. Is that fair?
Yeah, that's good. Let's go right to Thinkorswim. So I like 5-year month first. That's my master time frame, because the higher the time frame you look, right? So Best Buy is a great company. They've been doing pretty well, especially in comparison to like most retail companies. Let's take away all the technical indicators and just call them what they are. All technical indicators just measure this: high, low, and middle. If you look at this monthly chart in context, so the transparent candle or ghost candles are upward bullish candles. The red ones, of course, are down, right? Where in context is this to the high? It's above the measurement of what the high is. Go to the weekly. Okay. It's on the top band, the top high. Great. Go to the daily. Look how far outside the band the body was. So if we go high, where else can we go from there? We have to slide down. So another way I like to put it is it in the range of reason. This is in the normal range. Once we start to get here, like out here or down here, we're outside the range of reason, because technicals and fundamentals are now baked into one another. So I know everyone wanted to chase it. This is why I always say, if you have a good company, and I think you only need 4. Let's say if you are a little bit more risk averse, maybe go 8 maximum. But stop chasing stocks because everybody on Twitter or IG or Facebook was talking about them. Because if you look at the long-term chart, Best Buy is still good. This is a momentary blip in the market, right? So if you look at the last 5 years, the trend is up. But okay, so and then for those of you who don't know where to load the boat or ideal best prices, it's a 200 moving average. The times to load the boat would have been here. So if you got in at the correct time when you were supposed to and held it for long term, March, April, you're fine. It'll be a momentary pullback. And then in 3 more months, Best Buy will be okay. Quality companies continue to remain strong. Let's go look at 10-year. Great. Look at 13. The low is 11. This is doing amazingly well for a retail company. This is almost moving like a tech stock. So it's just simple technical analysis 101. It went outside what the high is. You guys know I love my analogy. So like if LeBron scores 52 or 58 in the next playoff game, you know game 2 he's not scoring 52. It doesn't mean you should trade LeBron. It just means that he went over what his high is, and then he's going to come back within a normal range. And don't be surprised if they slide back to like the $100 range. And in 6 months, they'll be back up to 112. It's just rinse and repeat. So it's knowing where the high is for the long-term macro chart first. Let that guide your intraday and your swing trades, and then you'll be better off that way. So
now that looked very, very familiar, Ian. Like that looks very, very familiar. Like, was that a Bollinger band?
You know, I mean, we both like the Patriots, so we both run Belichick's offense.
Okay, all right, cool.
Yeah, so
now be careful. You may have some folks that may get angry with you in the comment section.
Why?
They may have just learned about a connection there.
That'd be, that'd be all right. I mean, I was a fan before Brady was there, so
see.
Yes, so that's different.
So,
yeah, then for me, I never wanted to have to look and scan and decide what the high was. I want to know what the high is, what the low area is, because I want to run it like a business. So the same chart I showed, if I was a cereal manufacturer or a grocery store, I want to buy Frosted Flakes for 80 cents, and then I want to sell them retail for $3. I don't want to say, well, if this or that. I want to have a hard price. This is the low. I want to buy here, then I want to sell it. So we all are investors, and investing is the same game. You want to buy low, sell high, know that there's demand, know that you can have a system in place that works. And then once you guys get that down, the long-term investment stuff is way easier. But most traders don't look. The biggest mistake that most traders make is never looking at the long-term chart. That's why your support and resistance lines, like if you're doing support and resistance off a 5 minute, you don't know what you're looking at. Because if it drops 20 points below, you're like, what the hell happened? My trend line should have held up. This is what I need you to know. Trend lines are not concrete walls that price will not go through. We don't set that. On the retail side, we don't set that. It's all the hedge funds, prop funds, and now with quantitative easing, they have a say-so in how the market will go. But when you look at the macro, no, historically, somebody mentioned it in chat, Walmart, like, but even you should have used it last week for Walmart. Yes. But look historically at how well Walmart has done. There's only 3 retails: Target, Amazon, Walmart. You're good. That's the big 3. Hold on to them. Yeah, we're no college. 5 minute has too much noise. And I put this on Twitter last week. The higher time frame you go, the more money you make. The longer out you hold a position, the more money you'll make. So that's why long-term investor first, but for income, I do futures. But I don't know, maybe with the exception of Paul Tudor Jones, I don't know any. I mean, I know every big day trader there is. There are very few of them that hit 10 and 20 million. I can call at least 15 people that have made $10 million investing long term. And I'm talking like 7 or 8 years. So, but when you pair the two together, you're almost unstoppable.
So a lot of folks were wanting to know. So let's give a little bit of the fundamental analysis, shall we?
Yes.
So Ian just smashed it in the charts. So I wanted everybody to look at this because this is ultimately the tail of the tape as it pertains to Best Buy's earnings. So what the EPS actual was 1.71 versus SMI's, pretty much it was at a 52.68%. So they came in at 1.7 and then they came in at a $9.9 billion as it pertains to revenue. So why does this matter? They beat on the top and on the bottom line. Let me repeat that for you. They beat on the top and the bottom line. So here's what Wall Street's consensus was. And here is what actually happened. They grew 4% year over year. And this is also during COVID-19.
That's insane. For a retail company? Sorry, that's amazing.
So a lot of you are saying, well, hey, Mark, but yet it still went down. Yes. So here's a little tool that a lot of, or not really a tool, but here's pretty much a secret that folks on Wall Street will not tell you. Typically, when you have companies that are doing very, very well, especially when they know that they're doing well, and when they start realizing that expectations are starting to rise from Wall Street analysts, what they will do is you'll typically find that they come in what is quote unquote called light on their guidance, or what we like to call they sandbag their guidance. So when you typically see a company that's performing, especially quarter after quarter, doing well, I mean, because when we look at the history of what happened with Best Buy over this quarter and the last quarter, Best Buy didn't really miss a beat. Yeah, same in-store sales may have dropped, but yet at the same token, online sales have been consistently rising and actually taking over its in-store sales. So what they did was they sandbagged for going into the next quarter, which is closely around to the holiday season. And they said, hey, we don't expect to do as well as we thought that we would. Now, for all of those that really believe that Best Buy won't do that well during the holiday season, if you believe that that's a cap, go ahead and throw a cap in the comment section. And it's not just Best Buy that does that. It's also other companies. Apple does it every now and then. What they do is they sandbag so that way they bring down the expectations and then they set it up beautifully so that way they can crush it during the next quarter. So When we think about the stock also was running extremely hot going into earnings. We saw the same thing with NVIDIA. NVIDIA was running very, very hot going into its earnings. Both companies reported solid earnings beats, but they dropped. It's okay for investors to want to take profit.
That's why that long-term matters.
Long-term is the easiest money that you'll make. And I get it, because when people don't want to do it, because my perspective was the same thing. Man, I need some money right now. But when you look back, so I graduated in 2000, and all the big companies, so people were like, well, you wouldn't know. Like when I was on campus in 2001, it was a status symbol to have an iPod. Like a status symbol. We knew. But no one, and I have a bunch of friends that went to, at the time, I think IU maybe it was top 15 in B schools in the country.
Mm-hmm.
No one that I went to business school with, none of their professors told them to invest in the market. None of them. That's not their job. Like, and it's frustrating because I look back, I'm like, man, well, if we would have just took that refund money and put it into the market, even though you're not supposed to. Right? You're not supposed to. But my Lord, the returns on that would have been absolutely incredible. So pair those two together, pick a few, and then for those of you that trade, just pick a few trades. And but for those of you that do futures too, swing trading matters a lot, because you'll really understand the cycles of the market if you have money in the market for a longer period of time. And plus, then you also have some money working for you while you're sleeping. Because trading can be fun, but let's be honest, it can be exhausting as hell too. Especially if you're trading multiple markets, you're trading gold, silver, palladium, ZB, UBES, Russell, NASDAQ, wheat. Like
that sounds like a road team.
Sometimes, like, I'm done trading some days and I feel like I played in the NBA finals. I'm like, I'm good. Just let me sleep. Let me check on Apple and see what Steve, God rest his soul, is doing from heaven, and Tim Cook is doing, and enjoy it. So it makes a huge difference. You need leverage on your side.
So Jolin, what's our next subject?
Well, we've had a lot of questions about stop loss orders of sorts. I mean, a lot of questions. So let's just go ahead and clear out the inbox here.
All right, so Ian, let's do it on your side on, say, for example, the future side, and then I'll do it on, say, for example, the option side.
So if you're doing intraday, you can do either a 1-to-1 ratio if you have a higher win percentage. So if you're above, let's say 70%, and let's say if you're going for a 20 tick profit target, your stop loss can be 20 ticks. So everything that you do trading related has to be tied into your data. So I always ask every trader, what's your profit factor? Because if you have a profit factor of 3, 5 or above, you're pretty much winning on demand. If you're at 1 point something, you're above break even slightly, right? So let the numbers dictate that. Look at your time and market, but you can do a 1-to-1 risk to reward ratio. If you're not a good trader, I would go higher. So I would do like 5-to-1. So if you have a 20 tick stop loss, you need to go for 100 ticks. So if you lose those 4 trades on the 5th one, you can still make money. But then you only want to risk a certain percentage of your account. So I know the rule is always like 1%, 2%. That also depends on what your win rate is. Like Mark can do a little bit more than 1% because of his win ratio. And then also amount of time in market. When I'm in a decent zone, I can risk more than 1% of the, and also it depends on when. So like if Brexit happens, August 24, 2015, triple witching, quadruple witching, if you understand seasonality, you may be able to risk more if you know what your numbers are. And then you can, and then also we'll talk about trailing stops and stuff like that. But generally you don't want to risk more than 5% of your account. Because for most traders, it's almost impossible for you to lose 20 trades in a row. Like if you're trading full time, you should never even be in a position to lose 20 in a row. But 5% is the max that I would do. But on futures, I would do 10 to 20 tick stop loss maximum. And then for those of you that are doing naked trading, I would have a hard manual stop of 20 ticks as well. Like if it goes 20 ticks against you, close it out and just come back another day. Okay.
And so on the options market, it's slightly similar, but I guess the phrasing is just a little bit different. So when we look at our contracts, let's say that your position's up by 100%. So when you put in a stop loss or a stop limit, you can essentially just put yourself in and say, okay, hey, I'm going to actually put myself at a stop limit or a stop loss at 10%. So, which means that anywhere from now, from the 100% to the 10% down to 90%, it can pretty much cash you out of the position. Now, also, if you do, you can also do what is called a stop on quote, which is essentially considered a hard stop. And so on that hard stop, you would be putting it at the bid price of wherever you want to set it. And whenever it hits that price, it's automatically going to say, okay, hey, this person's out, done. So the difference between the two is, think of the stop loss limit as, say, for example, a limit order. There's a range. There's a range in which that it gets into, and once it falls within the range, it will be executed. If you're doing a stop on quote, kind of consider it like, for example, it's like a market. You're buying at market, except that you know the price. So it's immediately going to execute at this price, and it's done. Jolin.
Yeah, I'm looking at the questions here. And somebody, this question, I think, Ian, this question was referring back to the story you shared about the lessons. And it says, can you talk about stop loss being skipped? So you talked about it going 8.
Yeah. So if, let's say so in that trade I was long, for context for my traders, I was going along towards the high of the market, because of course, when the market opens, you have a dip down. So I started buying during the dip, got on a great win streak. Great, got cocky. I'm buying towards the high. Slides down, comes around down to the moving average. So once it got to, this is why trading during prime time is key, because liquidity is key. So you have enough players in the market that are buying and selling, because in order for me to win, I need to sell my contract to someone. In order for me to lose and hit that stop loss, I still need to sell the contract to someone. Mm-hmm. It skipped over because there wasn't enough people in the market. Like, I'm trying to sell ice cream in the middle of a winter blizzard. So I think the trade was like 10:35 Central. ES opens at 8:30. Prime time maximum is over at 9:45, usually 9:30. So I'm an hour past. So when it got to my stop, it did not get taken and it ran further down. That's a liquidity issue. So that's why I say just trade the open and close and you'll be fine. And if you trade 1 to 4 contracts, you won't have that much of an issue. But if you're trading 10, 20, for those of you that are trading like 50 contracts and more, that liquidity is so key. Like, even with SMH, if you guys go look at the volume on SMH is not dry. She got whop, right? Some of the other ETFs you guys will look at, they'll look like dots on a chart. That means there's not a liquidity there.
No liquidity.
It's tough. So it was, but even with that loss was my mistake, because I was over my number of trades and out of my prime time. So every trade, please write this down. Every trade, win, lose, or draw, is your fault. Not the market, because the hedge funds and the algorithms and everything, they either can hurt. Because notice this, when we win, we never be like,
the algorithms helped me today.
The algorithms helped me. They pushed it in my favor. No, it's, I know what I'm doing. I'm the greatest thing ever.
Right.
Then when we lose, it's like, Lord, why you let them do that to me? The bots got me. It's like, no, you have to understand. And also, like with the futures market too, from day one, you're competing against the best people on planet Earth. There is no JV in the futures market. Like, you're competing against the people that you admire on CNBC. They're in that market.
They're your competition.
Tudor Jones is your competition still to this day. So you have to be mindful and go with the flow of the market. So we're little fish. I'm following the whales. So if NASDAQ drops down hard, I'm short of NASDAQ. I'm long tech. But if BlackRock and their entire trading team, JP Morgan asset management team, they all short, I'm going to follow them.
Yeah.
They're the big brother, and I'm going to follow them through the woods so I don't get eaten up by the wolves.
There you go.
Follow direction.
A wise person once said, when sheep run with wolves, they get eaten.
Yeah, it's not good. It's not good at all. Just be mindful of that. And then also knowing what the true direction is. I think most traders do not know how to read candles as well as they think they do. Because people, you have to realize, The candles
Explain
just
that for
measure
them, because
price.
that's some jewelry there that I think that we can probably drop for some folks. Just
I
as
mean, if we all look at one chart, we should all see the same direction and see generally the same entry. That's why when we were like, hey, we should have a debating show, I'm like, what are we going to debate about?
I know, right?
We agree on every position.
We agree on everything.
It's like, yeah, it's like, okay, even we talked like, okay, I like estimation in the video. I'm like I've had the people in Red Panda and AMD for at least 3 or 4 years. Like, kudos to Richie. Like, Richie's up 240% off AMD now. This is no options. This is long-term investing. Been NVIDIA, been a Microsoft forever. Like, but when I talk to traders about different things, like if we look at the ES future right now,
okay.
If you guys let's say if we look at like a 15-minute chart, and I'll share screen so it makes more sense for everybody.
Okay.
If we look at let's go a common time frame, 15-minute chart here, and this is the session since the evening. There should be one direct.
Is this the S&P September 20th contract?
Yep. Future. Okay. Yep. Everybody should see one predominant direction. When I talk to traders, if I ask 10 people, it's 10 different answers. There's one direction in this move right now.
Yep.
One. You guys can type in comments what it is, and I'll tell you if you're right or wrong. But there's one direction right now. That's it. Not it's ranging, it's consolidating, it's post accumulation. Like, even all those terms, it sounds good, but it doesn't make any money. It doesn't make you any money, because the people that I know who know every chart pattern better than Steve Neeson, when I ask them, what's your P&L, or are you financially free? The answer is usually no. Like, master 1 or 2 setups. And people will criticize you and like, well, all he does is long-term swings for options. And I'm like, look at the P&L on them though. We're in this for money, not for entertainment. It's like, master 1 or 2 and you're good. Because the best traders that I've met that have made hundreds of millions off the market, they don't know as much as you think they know. But they are incredibly disciplined at taking their setup when it's time and only doing that. And only doing, like, Paul Tudor Jones doesn't even long-term invest.
Not at all.
Like, he made his billions from trading for clients and himself and does not long-term invest. Yeah. He has 2 setups. That's it. So
if it's not broken, don't fix it.
Yeah, no need to change anything.
So speaking of finance, Jolin.
Yes.
Is there something that that you wanted me to discuss? Because
yes, actually. So we released that video on the trading plans. And one of the key things in that video was the 70-30 split, where you invest 70% of your income and live off the 30%. And I want you to talk more about that, especially as someone who just in June, y'all, just in June made it to that 30% or 70-30. And it's been a game changer. And so I want to talk about that.
Okay.
And also, like, how do you get there? Like, how do you make that realistic? And Ian, if you have thoughts on that too.
I'm a guest in the house, so I'm gonna let the brother go first.
All right. So for those that don't know, I did something called I talked about something called the 70-30 rule. And so the 70-30 rule means that, say, for example, 100% of your income comes in from most likely work, or if you're an entrepreneur, kudos to you, but your income comes in somewhere, 100%. Now, if you're smart, then you will, the average person is like, the goal is to get to 50-50. But if you're smart with it, you'll get from 70% where you save and invest, and then 30% you actually use that towards your actual expenses. Now, if you can get from 50-50 to 70-30, then
What personal ratio do you use?
Oh, yours is ridiculous, Mark. I don't even know if you want to say.
No, say it, because I'm sure it's probably
3%.
Live off and you're putting away 97. What about, this is a great question, great follow-up, because I'm trying to work on my podcast thing and be like Rashad and Troy. What about secondary sources of revenue?
So secondary sources of revenue, I actually don't touch.
So you put all of that money away too?
Yeah.
So no Bentleys, no planes, no Patek. Okay.
I'm a simple guy.
Yeah. It makes it way easier.
I'm a
Makes it
simple
way
guy.
easier.
I mean, I look at it like this. It's like, if I'm gone, these things aren't coming with me. If I'm buying, say, for example, a Bentley or whatever it is, it's depreciating as soon as I buy it.
Yep.
If I buy like a boat, that's a liability because now I have to not only pay for the boat, but then I also have to pay to dock it. And then on top of that, I have to pay for its upkeep. That's a lot.
Yep.
And if I ever want to resell it, I'm probably not going to get it for the same exact value, no matter how much I put work into it. I'm probably not going to get the same amount of money that I paid for it. So for those things, to me, they don't really matter. Now, I like to buy tech, but I like to buy tech in which that I can use to literally further and accomplish the plan.
Yes.
But the reason why I say that these things are very, very important is because, and for those that are watching, you definitely want to write this down, because here's where it becomes probably like a part of like a half part of a blueprint for you. Actually, I'm going to give you a full blueprint, except I'm going to try to keep it short and concise. So let's just take this into consideration. Say, for example, you make $100,000 a year, just as an average number. You make $100,000 a year. Now, let's say we're going to just go by before taxes, because I think after taxes is like $77,000. But we'll just say in a perfect world, it's $100,000 a year. Now, 30% of that is $30,000, in which that you figure out a way in which that it's your fixed costs. Nothing outside of that. These are pretty much your basic bills and everything else. Remember how I said, live how most folks would never dream of living, so that way you can live how you always dreamed of living in the future. Yep. So just imagine you take that 30,000 and you're living off of the 30K, and then the other 70K, you're putting that into the market, you're investing that. Of course, keep in mind after taxes. So then you pretty much on a quarterly basis, and especially for like, let's take an option trader. That option trader knows that quadruple witching happens like 4 times a year. On every single one of those moments at a quadruple witching moment, you know that the options contracts will create new expiration dates. So then you take that capital in which that you've been saving on the sideline for those 3 months, you put that towards, say, for example, another long-term contract, and then you keep rinsing and repeating. So then you have one contract. Let's give you some real expirations. So let's say that you go from your first contract is, let's say, January 2022. Then when, say, for example, the next one comes out, it's June 2022. And then after that, another one comes out, it's September 2022. Now, as those things keep rolling, you're building over a period of time, because what we like to say is you pick winners. And if you're following either myself or Ian, you pretty much you should know how to pick winners.
Yeah, we give them to you. So
now you're trading on these winners, and these winners are doing exactly what they're supposed to be doing over time. And if you keep rinsing and repeating that process, you'll look at it over, say, for example, the next 4.5 to 5 years. You'll just notice that, your funds are just a little bit different.
It adds up. So, and for my fellas, I'll tell you this. So you're going to go through evolution point. You get to a point when you've had enough women, you had enough time showing off, and I'll tell you good and bad. I was stupid. So like in college, like me and Ty, like shout out to my guy Ty. Like Ty and I were wearing Versace and Gucci in college at Indiana University. So we thought we was like Rockefeller for real. But I look back at it, like those I cringe when I look at them now, because it's like it was fine for that semester, but
the novelty factor wore off.
And the same jacket that cost me $1,500, had I put into the market, would have made me like 80 grand. So it's like, but not knowing, that's why it's like, regardless of what your perspective is on me, whether you like me or not, that doesn't matter. But I've tried to give as much as I ain't tricking the DR. I never was a trick. I got them off Gift Gap. But not knowing was what makes me give so much and share so much, right? So, but fellas, you'll come to a point where none of that matters, because you can have the Benz, the Tesla, the Bentley, and then it gets old. Everyone always says, no, if I got it, it won't get old. I got a car sitting in the garage I've been drove all year. It means nothing. But also too, like I've had 22 people that I love die in the last 20 years. So I'll give all that shit up. The followers and the money for my grandmother to be back in good health, to give her a hug and be like, baby, I'm proud of you. Don't mean nothing. And then when I had Xander, it all became for him. So it's like, so going back to the discipline part. So I know some of you talking about Dave Ramsey. There are tenets of Dave that I do like. But for those of you like, I can't do it. I was broke the majority of my life. So what is it for me to put up 50% of the money when I saw me spending the money fast had no upside, even in the business? I don't go too deep, but like that 97.3, the most expensive purchase I made in the past year was probably out of the business is probably the tower. And from a tax perspective, everyone's like, it's not wise to spend your own personal money. I'm like, I don't want no money to come out the business. Not a dime. Like somebody say I owe them, I'll refund you out my personal before I go into the business. Cause I want Xander, when you see him at 30, to be like, your dad will stand up. He did take care of you the way he was proclaiming that he took care of you. Like you will know in 8 years or 10 years. And we all had a fantasy. The Bentley, great. His college tuition being paid for in advance means way more to me than a Lamborghini. I'll look fly in a Lamborghini now, but him being set means a lot more. And then also our kids follow what we do, not what we tell them. It was interesting. His first lesson in Camp Spark, shout out to everybody in Houston. First lesson that they had going back to school, because I'm homeschooling them, was on financial literacy. He was so happy. Dad, they're talking about Pepper and investing. What are two good companies to invest in? Apple and Microsoft. Okay, what can you do with money? You can save it, you can spend it, you can donate it, you can waste it. These are things I've been going over with him for years. So it's ingrained, but he sees me make that sacrifice. So when I'm like, hey, green means up, candle, red means down. So when he looks at the market, I'm like, how's the market doing? He's like, the green line is through the squiggly. He's talking about the bands. Mm-hmm. So he knows it. It's second nature, but it's not because from an education standpoint that he loves it. He's seen the fruit of my labor and me actually sacrificing. Kudos to Charles. I know you're in here, but even that pleasant principle, like for those of you that are married, you should live off one income and invest the other. You can stack some money doing that. So like, I know it feels like it's impossible to put away 50% into the market. It's hard, but if you stop going out to eat and doing other things and for those of you that are Black, for real, no company, and excuse me for cursing, gives a fuck about you or me. Not one, including Shea and BET. They do not care. We saw this through the recession. Yep. Type yes in chat if any company reached out to you and said, I will give you money to help you during this crisis. Not one. Not one. I know. And I know some of the biggest marketing directors, like those are my friends. The Black Lives Matter thing made them start to care about Black people for a second. Wait till the economy open back up next year. That's going to be dead and gone. Unless your guy get back in office. Going to be dead and gone. We have to take care of we.
That's the mission.
I'm not trying to preach. I'm just telling you what I live. So the reason why I put away so much money is in case something happens. Like for those of you who start rocking with me on the feature side in 2018, the first thing that I told you, especially for the women, I want you to get ready for 2020. Now, I did not know it was going to be this bad, but man, I was trying to get you ready for this. So these are all habits. That's why I say, even from the trading income, that's why you don't see me flash anything. And I still live minimal. I'm still in a 2-bedroom condo. But man, it's a great feeling to be able to go to the mailbox, and when the bills come, I smile ear to ear and be like, thank God I can pay this. Because I remember when I had to call in and be like, see, my mama, cousin, friend stole the bill. So can you send me another bill? And then I'm going to come up with another excuse. Different. So it's about the sacrifice, because like I don't want you guys to blow your money and get it. because it's not fun. Because some of you won't be able to make it back. So I hope that helped.
I want to talk about the logistics because if you have 100,000 a year and you're investing 70,000 of that, and the 30,000 is going towards expenses, an example you gave, this 70,000 is going to have to go into multiple accounts. So especially if you're doing like a Roth, you can only contribute 6,000. So then, you know, with the rest of that, how would you recommend setting up those accounts?
So I would definitely recommend using a Roth. And then I would also say, for example, if you're a long-term holder, or say, for example, a long-term trader, because I don't recommend for folks to do anything on the short term. But if you're doing it for the long term, there's nothing wrong with having both accounts. And then if you're really going to get tight with it, it's like when you get to a point, well, I guess I'll talk about that later. But when you get to that point, now you have, say, for example, your Roth or traditional IRA account, and then you also have your brokerage. Either one of those, you're playing in a long-term position, because each and every single one of those positions go out for a year. The good thing about, say, for example, playing those positions for more than a year, when you decide to get out of it, you just decrease significantly your capital gains exposure. You know, a lot of folks don't realize this, that when you're playing a lot of short-term trades, and let's say that you're winning, you're also paying a higher capital gains tax versus, say, for example, folks that are holding a position for a year and a day. Let that sink in.
And all y'all with the Robinhood accounts, those are all individual brokerage accounts. You will have to pay capital gains.
Yes.
Yep. You either going to pay them up front or on the back end. There's no way around that. But if you Roth it first, let it roll. It's there. And then also part of the reason why I moved to Houston, no state income tax. Now I know makes a huge difference. So like same thing I talk about with expense ratios. 2% may not seem like a lot. If you're in it for 23 years, I mean, you don't even know the person who runs the fund. You giving 2% up, that's robbery. Now you add that with income tax, sales tax, etc. And then also too, I know some people think it's not possible. Like at some point you're going to have to build a business to have assets flowing, so you can take those assets and then have that money make you more babies. Everything about me is just sacrifice, but I come from being broke. Like I'm talking like lose my debit card, don't call it in, don't get it replaced. There's nothing on it and nothing coming in broke.
And I've been so broke, if a person was robbing me, they'd just be practicing.
And upset. So, and then also like, that's why I have more reverence for my parents and grandparents for what they sacrifice. And let's be real. Like when I told my grandpa what I was doing, especially on the future side, he was like, because one day I lost, right? So, and I was like, man, I had a bad day. He was like, son, you push some damn buttons and make some money. It'll take me 9 weeks to make that kind of money. Don't tell me you had a bad day. He was in the war. He's like, the only thing I could read when I was in the war was the Bible. From that moment on, I got really, really keen on read. And this isn't 1850.
Yeah.
This is recent times.
Yeah.
So going through and having all of those perspectives and being grateful to even have access to learn any of this. Because in the 80s, I mean, kudos to the traders who grew up in the 70s and 80s. Like when there wasn't a lot of electronic and you had to chart your own patterns. My Lord. Like they look at us retail traders like trash, because like you have everything so easy. You know how hard it would just be to plot high and low on graph paper in the 70s? You would have like a book this big and have to plot your own prices. So it's like, okay, from that perspective, but also seeing, you know, my dad being an entrepreneur, so he does construction and real estate. It's all the same game.
Yeah.
I mean, we talked about it earlier. He was like, no one wants all flips. You want 80% rental income, 20% flip, or 70-30. Same mix. Every business lesson is the same. Risk to reward ratio from tech to venture is all the same. You want 25-1, 50-1, 100-1, to offset the 20 losses or 20 duds that you're going to have to be able to walk away. It's all, it just
means the 10x rule, right?
Yep. Yep. But if
I
can share screen,
by the way.
Yeah, if I can share screen real quick so I can give answer to this.
And while I want to shout out, we got 2,000 people watching.
Oh, that's amazing.
Lovely.
Okay, real quick. If this is the high, so even if, remember, all indicators do one of two things. They draw a horizontal line or they draw a vertical line.
Mm-hmm.
That's all they do. So this is the high, 34.48. The low is 34.39. We haven't even made it back up to the 50% or halfway mark yet. The trend is down. Easier way to look at it. Red candle, red means dead. And the futures market is good because you can make money as the market drops.
Mm-hmm.
But it's down. So if you're not breaking a high, you are in a downward trend.
Mm-hmm.
That's it. It's nothing complicated, but everyone should be able to see the same thing. And then even if we go to, because time frame doesn't matter because the real trend is still there. If you look, this is the same moving average. If it's underneath the moving average, it is not making a high.
Mm-hmm.
That's why I say, like, if you pull up, and let's pull up even a time frame that I don't even look at. Let's look at like a 34-minute chart. I think we can agree nobody here is like trading a 34-minute. Do you see more red candles, like predominantly? This is a bearish engulfing. For those of you who don't know what that means big ass drop. So big ass drop one, big ass drop two. We have not come back even halfway to the high. So this is like if you're making 100K a year, and then now here you make 25, and you haven't even got an offer for 50K. There's one trend in every market. So that's why I want to give you guys some context that the answer was down. That's all.
And they wrote down in the comments, so good job, y'all. All right. So
somebody asked me a question like, Mark, when can I retire?
Easy answer.
I'll give you a nice little formula, especially like because your question came from, say, for example, asking from your investments. When your investment returns equal 3 years, I like to say 3.5 years or more, you can walk away.
From a job or retire?
Just like everything. Because by that time, you know how to do everything.
Okay, got you.
Yeah,
got you.
Yeah. So, like, for example, let me go a little bit further. Let me go further. So when we say 3.5 years, right? Let's say, for example, you've done very, very successfully to get yourself to this point, and you say, okay, hey, I'm ready to take that step away. Notice I put that 3.5 there, so you give yourself that 6 months. Now you have that 6 months in which that you're living off of. Pretty much what you should be doing is with the rest of that 3 years worth of, say, for example, saved up, that should be netting you, say, for example, about at least a 3-time return. When we think about that, imagine that like 300%, especially when you're talking about options traders. I mean, you can give us the breakdown, Ian, if you want to on the future side. But as options traders, if you've paid yourself 6 months worth of salary, so it's already ready, you're already ready to go. Within the 3 years worth of, say, for example, other income or salary there, you should be at a point where you should still be able to play those same long-term positions. And then you should be able to find solid positions in which that you should be able to shave off another 6 months and pay yourself for the remainder of the year. And even if you're shaving off, you just substantially increase, say, for example, your years in which that you walk away.
Lewis Stanwood says retirement is not an age, it's the amount of money that you save or have. I would agree with that. So when I hear retire, I mean do nothing. So freedom, yes, I would definitely agree. 3.5. It's tough because the real answer is like, in order to be able to walk away from what some people call FU money, You need at least 5 years.
That is true. That's
100%
true.
Here 60 months. So like, then also from a business perspective, it puts you in a position to say no to every okay deal and only set up for A+ deals.
Yep.
So it makes it way
100%.
easier. So like me clearing and being disciplined allowed me to say no to a bunch of other things, which make room for this, which make room for EYL. Because even like on Market Mondays, like I posted it, like I'll do 12 hours of research for an 18-minute segment. I couldn't do that if I had bad spending habits. And then I know that asset will help. And if you guys go subscribe on iTunes, I would greatly appreciate it. I'm trying to get up to like number.
By the way, how can they find your iTunes, by the way? Go ahead.
You guys can go to Market Mondays, Spotify, Stitcher, any podcast platform, shameless plug. And just type in Market Monday, subscribe, and give us a 5-star rating, please. But I think 60 months is a number that you need to at least get to. But yeah, like ultimate retire, like having to do nothing is your monthly expenses times really 30. Like retirement is a number, but also if you keep your expenses down, you don't need as much. And even from a trading perspective, here's a great thing. When
You're giving away my keys, Ian. You're giving away my keys. Oh, well, there's the gym within the gym. So go ahead, Ian. Go ahead and tell them.
Listen, if I can't let my 16 off, I'll be quiet.
No, you're good. Go ahead.
Even on a trading side, when you don't have a bunch of bills, you then can wait for better trades. I know people want to get into subpar options. So everyone was like, United, Delta, Carnival, always said it, like no institution delivers financial information to Black people first. Does not happen. We're getting stepped on always. So I'm like, if that's the obvious play, that's not the place to be. I'm like, who's printing money? Great. Tech. Great. Nvidia, AMD, Microsoft, Apple, Google, Netflix, Facebook hit all time out. Like, great. So lean there. But when you have better spending habits, and it's tough too, because I'm tired of being in the house too, but it allows me to wait for only good trades. So if I have 2 or 3 fire trades that I know I can run off 40 or 60 ticks off on, and then potentially make low end 20%, high end, depending on what I'm trading, 120, 150%, I can sit down and I'm still looking every day, but I'll wait till the move is so good that I don't have to force anything else. Some days I may not even have a trade for maybe 12 days, but you have to trade more when the money isn't there, but only the broker benefits from that. For those of you that trade on Ninja, tell me if this is true or not. When's the last time you had a loss and your account manager called you and said, hey, I'm sorry? They're a toll road. They don't care. I've sent probably 500 people to Ninja in the last 2 years. When I lost a trade, I've never got an email. Their job is to put your order in and take it out. And they also know in this time too, this is a boom season for them. Shout out to Dave Portnoy, like who drove everybody through Robinhood too.
That commission, man.
Toll road. So it's your job to take fewer trades, because you have to realize commission and fees are taxes on you trading. So the fewer you take, great, you'll end up making more. And the more money you put away, great, because you'll have a higher win percentage. That's why you don't see any hedge fund managers that are broke that run any funds, because that will affect your trading. So I didn't mean to step over your point though. I'm sorry.
You're good. You're good. All right, Jolin, I pass it over to you.
All right, so
I willed my time.
You're so good.
Yeah, Ashley, good point. Infinity will check on you. So shout out to Patrick, because they do care. And Ninja cares too, just in their own way. I'm not gonna get my account shut down. Learn that game.
Wait, remember, Mark, earlier about TD? Well, actually, never mind. We'll talk about that later.
Yeah, we'll talk about that later.
Y'all. Okay, so let's talk about how Investor Day is coming up and what's that's all about.
Okay, so for those that have been hitting me up for the millionth time about Tesla, given in the sense of the Tesla stock split, I'm not talking about the Tesla stock split. Ian, we are not talking about Tesla or Apple splits.
Please, ever again.
Done us.
Yep.
It's over. Finito. All right. So the next thing that we have on our agenda is the road to 2021. And along that path is Investor Day on September 22nd for Tesla. Now, of course, I mean, I'm going to state my bias. I am a Tesla owner as well as a Tesla shareholder in stock. So I am pretty excited about that day because I definitely want to know about two things in which that here's what I expect to be talked about. One, hardware version 4. Why does that matter? Because it's pretty much Tesla's way of saying, hey, we're moving in our second generation of us fabricating our own chips and making those for autonomous driving, aka full self-driving. Who benefits from that? Not only Tesla, but also a company by the name of Taiwanese Semiconductor. It's no longer the Tesla NVIDIA relationship. Don't worry, don't cry for Argentina for NVIDIA because they also, ARM deal and everything else, data centers. So we move on. So the other part that a lot of folks are pretty excited about is the battery. Now, the battery is going to be very much so huge because it's a game changer. And if it's what everybody is expecting, it's going to set it light years ahead of the rest of the competition. We're seeing Teslas out there that have come out since 2011, 2012 that have racked up over 450,000 miles on one vehicle without zero battery replacement. They say that the Model 3s and Model Ys currently should have, say, for example, up to 600 to roughly 800,000. But I think that's a little stretch. I think it's more like 600,000 to roughly 700,000 miles of usage. Now we're talking about million miles. Game changing.
Yeah.
Game changing. Now, keep in mind, there is this other thing that a lot of folks have been kind of whispering about. Like, for example, Tesla has also open sourced a lot of their patents. A lot of folks don't know that. A lot of folks think that when you think about patents, a lot of those are closed off. They're open. Now, when you have a closed off patent, that means that you have X amount of time until once it's reached its expiration date, now they become open. Imagine what happens when you do it from the flip side.
And it's kind of like the App Store, open source.
And there's a lot of car companies out there or car manufacturers that are trying to build electric cars. But I'm sorry, have we been hearing about any of them building supercharging stations?
Not I.
And also keep in mind, there are whispers about Tesla also being in bed with Target to have their supercharging stations there. Yeah. But that's just whisper of a dream. So we're not even gonna get into that. But Investor Day is going to get a lot of investors hype. And I'm probably sure that they're also going to talk about their roadmap strategy for when they become a part of the S&P 500. Now, of course, Tesla doesn't know exactly when that happens, but they should be telling investors, well, what would that look like if we go down this process or when this process comes into fruition? So those are the things that I'm highly interested for. And most likely your institutional money is going to be thinking about that. If you haven't noticed, if you want to know what institutional money is doing, not only look at the shares outstanding, but look at the rate in which that those shares outstanding are significantly decreasing. If Tesla becomes a part of the S&P 500, 42 million of those shares are automatically wiped away. They're taken by the S&P 500. So just
that'd be a nice considerable bounce. And also, I'll put Tesla.com into the chat on YouTube. I want you guys to go look at what product line they have in addition to the cars. Because if they have supercharging stations and then the batteries, just go look at what they are offering. That will make a huge impact on their business. I gave an analogy yesterday. If you heard it, great. If not, I'll let you do some research. But go look at what Tesla has to offer other than just the car line and where they could have a competitive advantage. Because BMW, they are not going to be able to do well in the EV space. I know everyone's excited about NIO Unplugged, but the truth is, most people are excited about NIO Unplugged because they missed out on Tesla.
Yeah.
That just wait, be a part of the split. And also, too, you don't have to believe me. Go do your own research. Go look at any other top 20 tech company that did a stock split and see what the average return was over a 5-year period. I think you would be shocked. So
yeah,
that's a key insight. That's a key insight because now you can extrapolate and see. Let's just take. I want to say which one, but outside of Apple, Just look at the top 10. Look at how much they went up over 5 years. Divide that by that 10, and it'll give you for how much it should go up over a 5-year period. So
can I say one more thing? And a lot of folks talk about how like Tesla is like overvalued. Let me just put it to you in this perspective. Mm-hmm. If Tesla needed to raise $25 billion, how long do you think it would take them to raise that?
Conservatively?
Oh, I don't want us to answer that. I want them to like think about that one. That's just, food for thought, but
Yep. And then also look at his track record. Just look at his track record, going back and going forward. So,
Jolin.
We need to talk about strikes. And the reason why is because we have people that are doing their strike formulas, and they are then disregarding the math, aka the plan, and going for cheaper strikes, and then crying in the DMs about losing money because the strike is too high. So
strike is too high on a year out?
Yeah, so no, not in a year out. Well, January 2022, people are buying positions right now, but they're doing strikes that are way too high because they're cheaper, as opposed to sticking to the range that your strike formula is supposed to stick with. Yep. And unless you are buying a whole bunch, I'm talking about at least 3-digit worth of contracts in that, and you're ready to, get out at a certain time, y'all, please just stick to the formula and buy what you can afford. Otherwise, you will see red and you will feel some type of way. So, Mark, I don't know.
Do you want me to add some context to that?
Add some more to that.
So, because I'm hearing that this is happening with a lot of options traders, especially folks that are like getting burned, especially like, for example, folks that like to day trade or say, for example, play weekly trades. Mm-hmm. This is one of the reasons why I like to focus on being simple and stick to the fundamentals, as well as not trying to pretty much don't give a seasonal trade lifetime expectations, just all those combined in one.
For those who don't know what that means, because I know they're going to ask me, for those who does not know what that last statement is, can you make it simpler?
Yeah. Oh, so don't give seasonal trades lifetime expectations?
Yep.
So when I mean don't give a seasonal trade lifetime expectation, you may be in the trade for 6 months, but yet you're giving it a 3-year expectation, or you're attaching 3-year expectations to it.
Yep.
It doesn't work like that. So for example, if you're in a trade for 6 months, you have to understand exactly what are going to be what is going to be the catalyst. You have to understand what the risk is. You also have to understand what the potential rewards are within, say, for example, really 3 months. Because like I always say, if you're playing 6 months, then you're getting out in 3. And if you're playing 9 months, you're getting out in 6, and so on and so on and so on.
Yeah.
So if you're playing, say, for example, a trade for a week, what are really the fundamentals, or what is really the information and knowledge that you're gaining in a week that's really going to significantly move the stock when you're setting it out to these ridiculous strike prices?
You have to have a significant trading edge in order to pull it off. That's what makes intraday trading tough.
Yeah.
And it takes a lot of practice. Yep.
So I guess what we hear a lot of folks say is that I'm playing it for the momentum. But just as much as you're playing it for the momentum, here's the thing about playing a momentum trade. Even if you're playing a 2-year trade, but your strike is ridiculously high. One, it can decay also when you're playing a 2-year position, when your strike prices are just too far out and they're just not even on the scale. Why? Because say, for example, we go through, let's say, a 6 to 10% correction. That's going to hurt you more than, say, for example, the person who's actually closer to within the range of the strike. That's the first thing. Second thing, when you play so far out of the money, you're also shortening up your time. So where you were supposed to be in a trade where you were buying yourself time, you're actually taking away your time, which is putting you also, again, at a disadvantage. As an investor and as a trader, you always want to find yourself in a position where you give yourself the most amount of advantages, not just based upon what you feel. I mean, it should never basically go off of what you feel. It should always go about what you know and what can be validated.
Well, so the strike formula that you have them use, is it in Excel, or you have them do it by hand, old school?
Both.
Gotcha.
I mean, me personally, it's like, I now do it to the point where I can actually think about it because I've been doing it so long, but it's very simple. Here's the simple formula that everybody's been asking me. If you're playing a 2-year trade, most likely the very latest that you're going to get out of that trade is at the 1.5 year marker.
Mm-hmm.
You take the 2-year trade, whatever the 2-year performance is, and then you divide that by 1.5. Then you take that 1.5 and then you multiply that times, you can either do it times 0.9, which gives you 90% because you take away the 10% correction, or you can do it the flip side and multiply that times 0.1, which gives you the 10% correction, and then you have to subtract that, an extra part of the formula. Or you just do times 0.9, and then therein you add that number to the actual current price.
That's pretty
simplistic.
Simple. Yeah, but the thing with any trading plan, as humans, it's hard to do the same thing over and over again. But also, well, we talked about it yesterday, like silence. The best thing you can do for your trading is stick to your plan and don't listen to anybody else. Don't listen to anyone else at all. So like, because if you can tell a direction, like, so you guys are like, should I do a put on CRM? CRM is going to come back down, yes, but long term, what is the direction? So try, like, the thing for me, any stock I look at, I try and look at when I don't have a position in it. That way I'm not biased. That way I can decide where it's going to go. And there's a whole bunch of tools. You can use Fibonacci, you can use Fibonacci extensions, great. But before you put your dollar in, you can look at it and be like, is a trend going up or down? CRM is not going to fall down. And it's also like a tech company. If you look, and I'll probably dive into this next week, but if you look at the recessions, NASDAQ hasn't suffered as much as the Dow. I'm not going to say that the Dow is pointless.
So we're not. You ran out of water.
It's antiquated.
We got you.
The way it's weighted, it was great for back then, but now, because I told you guys when I was going through in March, I'm physically looking at the charts and I'm like, oh, these companies were terrible before COVID.
Yep.
Like out of the Dow, there may be 6 in total that like have any value. NASDAQ recovers fastest, has least drawdown. Like even if you guys just go to a portfolio management calculator and just put in 5 or 6 of these tech companies that you guys talk, because my formula is like half index, half tech. It's an easy way to out edge the S&P 500. I won't say beat the market. I would say out edge the market. Yeah, just go look. Just go look. So.
All right, last thing, y'all. I mean, we went over mainly because YouTube was hating and we came in late. But the last thing, the theme of these DMs has been corrections. So I don't know what y'all want to say about that, but everyone seems to be either worried about it or not sure what to do, or if they're waiting. So I just, I'm trying to clear my inbox.
I'll say it for you and go out on the edge, and hopefully the brother that's been spamming all night won't get upset with me. I love you too. There won't be another correction.
The brother that's been spamming.
Yeah, like quantitative. Yeah, quantitative easing just means that the Fed will print every dollar they have available to keep the market afloat. So the big reason when people ask about, because the same thing happened in 2008, people was like, when's the next crash has to happen in 2 years. It's only because some of us missed the first one. So when I missed it in 2008, I'm like, I love Obama, but God, please let the market drop in 2010 to make up for the mistake that I made in 08. And then we had one of the greatest bull runs in history.
Yes.
Now, second wave will hit, great. Like if you study history, what happened in the Spanish flu will happen again. Interesting enough, a line graph will look the same as like Hertz or Kodak. You'll have a considerable run up, and then it'll slide back down, and then we'll taper off. But go look at what happened last time this kind of pandemic happened and how far the market ran up from there. So we aren't going to have a big pullback because now NASDAQ will have to drop pretty much 40% to go back down to where it was in March, they're not going to let that happen. And I'm gonna be honest with you, some of these tech companies are splitting so somebody could win the election.
I wonder who they could be.
I'm just being real, and that's one of the reasons why I know with pretty 90% certainty that Amazon won't do it. Definitely pre-election, because it would aid him.
Yeah.
And Jeff and Don don't like each other. But maybe another company has a relationship with that may get some considerable tax breaks if they do split. So you got to look at the entire ecosystem and understand why things are moving.
Okay, Jolin.
So just being real.
All right.
But I want to give some stuff away real quick. So, because the brother, so like I can give you a free setup. So because I understand when things are not going our way, sometimes we tend to lash out. And I know there's like this thing like, well, I charge too much, but like I'm going to be I don't need any students because I can actually trade, right? But if you need help, this is for anybody. If you ever need help from me, just say, hey man, can you help me? I'm not where I want to be, because people help me. So if you want, I'll give you a free setup. But for everyone else, just go to ninjatrader.com. I get nothing from, they haven't sent me a pen or a cup, right? 20 tick stop loss, 20 tick take profit. I showed you how to tell direction tonight. Go practice, take 40 practice trades. And if you do that, then trading is for you. Just stick with that and you'll be good. You don't, even with some of you that are asked for scholarships or can I lower prices, the main picks in the stock club is Apple and Microsoft. So when I intentionally give the shit away, and this is the thing about investing too, people will tell you to like buy or invest in what you buy in because they don't care about you enough to tell you what you really invest in. The best question to ask an investor, what are you actively investing in and how much of your portfolio is that? That's the right question to ask. They will shuffle us to the side and say, just invest in what you buy. That's not the right answer.
Yeah.
So invest in quality companies. If you need another tip, look at the top 10. Historically, that has always worked. Pick out of the top 10. It's not that hard. It's just like hooping. Like if I'm like, yo, who's hotter, Beyonce or Latavia, who used to be in Destiny's Child? You may like Latavia. Kudos to you. I'm not sneak dissing you if you listen to the show. But Beyonce is hotter, right? That will be Apple. NIO is the former member.
Shots fired.
Right. And I'll say this, if Apple falls off, or because the Ballmer years were not fun for Microsoft. They have a great CEO now. Like
I survived the Ballmer year. So
yeah, it's like just Google top 10 companies and then pick 1 to 4 and then 2 indexes. You'll be good.
Yeah.
Like, and somebody said us how they love Ford. We can go right back to the charts. This, like, your investing style should have nothing to do with your personal opinion. It should have everything to do with what you see on a chart. I will share this one more time and give you perspective on why. If this is your first time, this is a 5-year chart on Ford. Alan Mulally did an amazing job during the recovery of 2008-9 when he came to helm of Ford and got them to a high. Now, for my traders, look at this as if it was a 5-minute chart. And if we were continually printing down, are we going up or going down? The clear answer is we're going down. This is a 5-year month chart. Ford's not good. I don't care about the Bronco. The Bronco got OJ in trouble.
I was going to say, funny fact, this is probably the most traded stock on Robinhood.
But it goes back to traders, and I'll say this too, and brokers don't get upset. But in a perfect world, every investing platform would only have 4 time frames. You have all of these different time frames so you can have divergence in the market. So, because like it's like hooping. If I go to your court and your rim is 28 feet, I'm going to play different if I'm used to playing on a 7-foot rim. Why is it not regulated that everyone looks? But if you go to Yahoo Finance, they all have the 5-year. No one looks there. But let's go 15 years back and go to a quarter. the peak of Ford was in 2010. You think a Bronco gonna bring it back?
Can we run a comparison chart with like, for example, over the last 5 years with, say, for example, Tesla?
Oh man, that's gonna be a crazy graphic.
I mean, if we just look at 5 years, great. Big base like Kathy talked about, but the 141 up to 300, this is still a win. For those who actually traded, they use Fibonacci. Every time Tesla hit a high, it would go to the 50% retracement of the macro chart.
Yep.
It will give you a precise area to buy, 50% down from the high. And then it took off. They finally start printing revenue. And look what happened. This is Bitcoin to the moon that y'all wanted.
This reminds me of Amazon back in 2014 when they reported profit for the first time.
Yep. That's why I always say, go look at the chart. It'll tell you everything.
Charts don't lie, y'all.
Everything that you need to know. It should be data. So you want your stock that you invest in to look like your bank account. I want my shit to continue to look like this. When it was down like this when I was young, it wasn't fun. It wasn't fun. But that's why I said I can see the signs like when a person is hurting. And because I lashed out more when my money wasn't right. I got a lot calmer when my money was straight. But I see your comments. I do appreciate you. But if you need help, my brother, in investing or trading, let me help you. I'll help you for free. But all that trolling back and forth and all that charge too much, like that makes people not want to give. I'm gonna be real with you. But I'm gonna be real. If I snag out 39,000 in the market, do you think what I'm charging for to teach you? It's a lot. Being real. I got some people to make 25,000 a day. I'm just being real. So, and a lot of people I admire came through me like, come on, man. But namaste. Let me help you. If your money is not where you want it to be, between me and you, just message me and say, brother, help me. I'm not gonna shit on you, but I want to keep this space pure. Because if you go to Motley, Tim Sykes, Grattani, y'all don't do that on Kramer's page. And Kramer ain't never gave you no fire like me, Mark, Trap, Rashad, Troy gave you. And I love Kramer. Kramer can trade. I know people joke on him. He was a beast at Goldman.
He can trade.
A beast at Goldman. Go look at his track record.
Yeah. He also documents it in his book, Get Rich Carefully, in which they talk about the types of trades in which that he did.
Beast. So I love y'all though. So I appreciate y'all a whole lot. I'm gonna keep sipping my lip Propel. And I need that shirt too. I need that shirt.
Oh, this one?
Yeah.
Nah, I got something better coming for you, brother. I got something better coming.
I mean, the first thing you sent was amazing.
Oh.
And Xander loves that. That's his thing. Hey, so yeah, if you guys need help, like, and even on Market Mondays when you guys hop on, like, in all trap, like, we're here as a community to help. Because I mean, even you go back 10 years ago, man, it was just Motley and Sykes. I'm gonna be, and even with that, like all the traders you guys look at, like all of them, I'm cool with all of them. There was no space for us, and I'm be real, especially on the future side, they did not even want us in. Like when I first got in the future space, I was like, "Who taught you that?" I was like, "Oh, one of my friends showed me." He was like, "Man, you don't know what you have in front of you, right?" So, just master your craft and research. But the tough part is, will you look? Shout out to Terry too. Will you look at the market for 6-7 hours a day? And now if this is for the fellas, ladies, you cover your ears. Pre-orgasm, post-orgasm, post-vacation. When y'all argue, when she tell you you need to give, somebody asks, how do you get your queen to believe? You may have to get a new queen. I'm being real with you. Or the money may have to come in so fast that she said, damn, baby, now I believe in you. You got to pick. But you have to put every hour and treat it like the league and put in every hour of the day. I've been late for meetings looking at the market. Meetings that paid me. So the title, that's why I say, like, I'm trying to earn the title every single day. But man, that comes with time in. Like, yeah, I got off Market Mondays yesterday, walked 5 miles and looked at Thinkorswim damn near the entire time. Put in the work. It's up to you. The choice is yours. So.
Y'all, Can you guys believe it? We went like, go ahead.
No, I'm just saying, let me help you in this community. I want you to stop trolling because I'm going to tell you, Benzinga dope too. And this is a great part too. People that can really invest have no issues with nobody.
None.
Shout out to Josh Brown. It's a whole bunch of people that y'all look up to that be in our DMs all the time. All the time. Like, just master your craft. You see, like, me and Terry get along, and me and Mark get along, and me and like SMH, that's her bae. She let me take her bae on a date once in a while, right? I let her use this video, right? We keep it all in the family. Right. And for you guys, take the same ones and use them. Please use them. Invest long term. I trade for a living. More money is in long-term investing. More money is in long-term investing. I wish I would have listened. And then going back, and then for your kids. Xander, my child, he's 5. He has more money right now than I did when I was 30. That, like, trust me, some days or two, I'm gonna get a Panamera and all that. But like, for him to have that and be cool, or be like, Daddy, for your birthday next year, I want to go to Africa. I'm like, okay, we can go. That felt great. Opposed, but I don't know, man. We'll wait and see what God got for us. It's different because it changes his perspective on also working hard too. So, and you know, we both Patriots fans, so I'm about that TB12 Mamba mentality life. So, yeah. So, yo, I appreciate you guys letting me be on and rock and give my perspective.
Yeah, thanks for being here.
I'm honored to. It's a blessing. It's a blessing.
We just elevated.
Like 7 years ago, I couldn't get 9 Black people to talk to me about investing at one time. I'm being real with you. Couldn't. It's like, man, that's lame. Leader, that's for white people. I'm like, bro, you know how much money in the market? Like, you know, so the way you guys have opened your doors, thank you. And then even for that, for those of you who are watching, listen, because my sister quiet, but she a quiet killer. Notice her, Troy, the people that quiet. Like, as some of you that I'm watching the comments that I see you trade, you don't say Charles, quiet killer, right? But notice how when we talked about SMH and NVIDIA, there was no conflict in what we both thought. No conflict on CRM. Because an investor they were all going to see the same thing. Every coach can see that Michael Jordan is fire. Every coach can see that Luka is amazing. That's baby bird right there. It's like, great. I'll take advantage of it. And the thing I don't want you guys to do is to know all of this information and then do nothing. And in 2030 be like, damn, I should have listened.
Yeah.
I don't want it.
You have to ask yourself, in 2030, will you be in a totally different landscape, different world, or will you be still treading in the same waters, running through the same race, letting the tracks be established for you to go around in the same circle?
Yep.
So, Ian, brother,
I appreciate you. That Black girl art world, fire to and them glasses. I appreciate you. I've heard nothing but amazing things about you. Thank you for allowing me on your platform. And I always say too, I'm not just catering because you're here. I always say women are better investors anyway. So thank you for opening up your world and talking.
You also said that last night.
Yeah, like
you said it last week too.
Yeah, like, it's true. So what you're doing will have a significant impact on culture, thousands of lives, thousands of families. I know you're a little bit more quiet, but
hey, yo, babe, come take the trading desk.
Seriously, like, the main thing that keeps me going is something that my friend, one of my dear friends, Chauncey Beatty, says all the time. She's like, imagine what can happen when money is placed in the hands of Black women.
Man,
and that's why I go hard for my sisters, man. Y'all already know. Yeah,
because it was even, I mean, we're in here, but as oppressed as the Black community has been, it's been worse for women, and women were head of household with finances. So it's like, men will get the money and go mess it off trying to look flyer than what we are. Women end up taking care of a whole, but like, it was like the love of my grandmother. Like, even when I walk through Houston and I see the homeless people, it keeps me humble, but I'm like, 2 parents away and a grandma from being in the same spot.
Yeah.
My grandma did a lot for me to, like, you know what I mean? Like, help me. But also my grandmother grew up in rural Alabama. Like she grew up in Midway, Alabama. It's a plantation city. So like the effect that you're going to have on people 15, 20 years from now, like I cannot wait to see. But thank you. And thank you for letting me borrow your bay once in a while too. I appreciate you. For real.
Ian, you are more than welcome at any point in time to come back on the show. I mean, even if there's eventually something else cooking, you never know. But
I can't cook, but if I can serve, I mean, maybe we should do some one day. Just putting it out there. Just one day. Maybe we can all get together and, I'll be Gronk. You can be Brady. Maybe. If the people want it, we'll do it. So
I mean, if we'll leave that to the folks. Like, if you want to see the Ghost and the Dark Knight come together, or
I'm just a humble servant of the Lord trying to help the people. That's all I'm trying to do.
Yo, 50K. That's what it changes.
Yeah. Rod, man, you grew up in Midway, so like it's real. It's real. But no, I appreciate you guys so much. I love you dearly. Everybody on YouTube, thank you.
Thank you for having us, brother. Thank you for, just taking the time out of your schedule, because we know that your time is precious. And so we will definitely have you back.
We should do some live trading one day.
Oh man, they ain't ready for that. They ain't ready for that.
Come on, baby.
They ain't ready.
Because then, like, okay, real quick. I want to keep y'all on forever. But like, if they can see the power, because like, let's talk about it from like a strategic perspective and act like they're not here. So we already got the long-term stuff on Smash. But if we can get it to the option and these take off, and let's say we got calls and then we short the S&P because we see that the market was dropping, we can offset some of the risk. Let's say if the bid and ask is a little bit wide on the option, and then you can make up that money on the future, liquidate the position, roll that money back over into the long term, and then in 2 months the option continues to go higher.
Why not play puts on both?
I mean, the ones you call it are really, I wouldn't say, and it's a great way. I love the way you guys invest, because you really are getting a multiple, and this is your VC side. You're getting a multiple on a long-term investment. So it's like, why short it? Because you're capped on like CRM, Apple, Microsoft, NVIDIA, AMD, Amgen, XLK, VTI, MGC, VOO, DIA, QQQ, TQQQ. They're not going to drop 50%.
No.
It'll take an active God in the Walking Dead to come for the market to drop. And like if the Walking, people ask me, what if the world ends? They're going to halt the market before it goes to zero.
They'll halt the market.
They'll just stop the market.
Yeah.
They will never technically let it run to zero, because if so, and the power comes back on, instantly Japan, China now takes over.
There you go.
They're not going, that's their lever. So,
which leads us into Thursday's episode where the Wolves play. But yeah, I mean, Ian, they're not ready for that, fam.
The live trading thing.
But the game can change at 50. I'm just gonna say that.
Hey man, it would be a different beast. And then also for those of you that trade small contracts, don't think that you can make big money with small contracts. You just need a bigger target. There's also less risk. So you may want to go for a bigger tick target. Like if you're doing futures, maybe 100, 200. Cool. Then if you are able to do both options and futures, and this will also give me a lot of calmness in my long-term investing. Well, my short-term investing is that the long-term is doing well. So let's say I lose 10% on an intraday trade. If I'm in Apple and I borrowed her Bay, we all little side boo, I get NVIDIA. I know NVIDIA can print 10% in a 60-day cycle. So it's like, so it's hedging within hedging, but I don't want to geek out because I can go
within gyms.
Yeah, man. Like I'll go for David Tepper real quick. Jim Simmons on So
it would be nice to say, for example, if you are playing the 2 year and then say, for example, 4 times out of the year you short that position really hard, and then
for 40 or 35% guaranteed gain.
when you're doing that type of gains, just remember it's like, it's just a little different, and then you can retool.
Yep. So for my futures traders, I'll end with this for real. Have a target that you can hit without reservation. And here's a great thing. Don't nobody need to know what your damn target is. Because if you guys are trading ZB, or if you trade multiple assets, ZB, UB, ES, NASDAQ, Russell, Nikkei, wheat, gold, even if it's to say 5 ticks, you hit 4 trades, you're up 20 ticks. And let's say you do 25% of your account, you can easily print 25 to 30% hypothetically if you are consistent. And that's before we get to any, I ain't gonna touch on the last point, but before we get it to any,
I think at that point we can just say it's just different.
Yep. That's why mastery of one target is so key. And for options too, I know some of you guys get FOMO and get jealous that you didn't get 200, but if you get 15%, you have to be mindful that's one trade.
Yeah.
Do that 10 more times. Some of you are complaining about 150% or 100% return when people can't get 8% out of the market.
Yeah. People are getting shafted, and you know what? I'm gonna leave that one alone.
Yeah, it's like you can kill and with information.
I'm gonna leave that one alone.
Yeah. So I don't, so I know some people like, oh, he just talking. Like, man, I dress like trapper most days. Like if you see me, it's like I dress up in homage to my grandma more than anything. But it's like,
that's sweet.
Man, you have to, it's a favorite color. So, but have a target that you can hit for real every single day, and you're good. Even if it's 2%. In this market, if you can hit 2%, let's say a week or a day for 2 years, you can go build an empire off that. Because most traders that are hitting 80% now, they're going to blow their fucking accounts up in October, November, December. Consistency is king. That's why I love Brady. Not the biggest arm, not the most athletic, cerebral assassin. He was good at 2 to 8 yards. Phillip Rivers had a bigger arm, and clutch. Phillip Rivers couldn't get you 2 yards though. Trade your plan. So, but
y'all,
that's it. I'm done. I know y'all tired of me.
I don't even know if you know what, Jolin.
We need to do some live trading.
Yeah, we definitely need to do some lives together and some live trading. That's definitely gonna happen soon.
I just want to shout out to the 2 Black-owned businesses again that we talked about earlier today. So on IG, you can visit at My Majesties, which is MyMajestes, My Majesties, and then also hit up at the Shady Side Up.
There you have it.
It's like this.
And I forgot to mention my homegirl Lindsay last night. I'm sorry. So the Gifted Treasure is a company that one of my students in Red Panda has. If I need to pay an advertising fee, I would be happy to do so. But Lindsay, I love you. I appreciate you. And I don't get any commission if you guys buy from her. So I need to say that. So she's a Black woman. I'm just here to support. So
y'all, we love you. Ian, we love you, bro. Thank you for coming on to the show. There will be more. This is definitely to be continued.
It won't be 9 hours next time, though. My bad.
It's all good. It's all good.
It's all good. All value.
All value. Hopefully, y'all, if you enjoyed this segment, which was, more than what we could ever ask for, go ahead and smash the like button and please subscribe because there will be more content coming out. Sorry, that's Butter sneezing in the background. But we love each and every single one of you. We hope that you grab value within this time. We know that you're going to have to probably go back and rewatch the video. So it's here. We don't delete our content. So you can always come back and rewatch it. This episode is definitely gold. We look forward to seeing you on Thursday, which we are at 5 p.m. Pacific time, 8 p.m. East Coast time.
Yes.
I think that's 7 o'clock Central time. We love each and every single one of you. If you want to find Ian, how can they find you, Ian?
The Master Investor, you can look me up by my full name, Ian Dunlap, on Facebook, for those of you that still use Facebook, and LinkedIn. or you can go to joinredpanda.com. So, but Queen, I gotta ask you, besides SMH and NVIDIA, what else are you looking at? To give me like a top 5.
5
or top 3. I don't want to top 3, or if you want to do top 1, it's up to you.
What am I? Okay, so right now, ARC W is about to be snatched up. I'm also, I just keep double dipping in the chips. So Taiwan Semiconductor. I'm also looking at. Man, I don't even know if I want to say this.
No, don't do it. Do investor to investor, trader to trader. Don't. If you have something close to the chest, maximize the profit on it. The only chip maker in the space that you don't like is probably what, Micron?
I mean, it's not that I don't like them, but I mean, I'm not checking for them.
I got you. Yeah, they trash. That's what she's saying. Okay. I got you. I appreciate you. I'll be okay. XLK, XLY, you still like?
I think of XLK as a parent. They always gonna be there. If I need some money, they got it.
Got you. Okay. Great answer. And you're smart too to not give up that ace in the hole too. So that's smart. I feel you. You're smart.
Hey.
That's smart. Keep that to yourself, please.
Mark knows though. You do, Mark.
And now they're gonna blow his DMs up. What's the 5?
Right? I mean, people have been asking who's my Taylor and Wags from Billions. Who are my Taylor and Wags?
Man.
Maybe in the next episode I'll release that.
That'll be
butter.
That's funny. Yep.
All right, y'all.
So
we
I
gotta get off the air time.
We gotta go.
We gotta go.
Dang, it's 10 o'clock. That's crazy. All right, love y'all.
Y'all know.
Have a good night, y'all. This has been The Come Up. I'm Mark Monroe.
And I'm JolynGC, and the place to be.
And who is this guy? Who are you?
I'm just Sandra's dad. I love y'all.
And this has been your Come Up. We love you guys. Have a wonderful night. Peace.